Charles, you were kind of surprised to hear his take, and he really was speaking the market speak when he was out there.
Good morning. He was speaking the market speak. It was his second pivot in about 3 months. In early October, he made the infamous comment about, we have a long way to get to neutral. He walked it back when he pivoted in mid-November. He then made the comment in December at the FOMC press conference about autopilot, and then he reversed that second pivot this past Friday.
What does that tell you, though?
It tells me that he is learning and increasingly sensitive to market participants' expectations of arguably one of the most powerful people in the country, and that he is learning on the job, even though he's now, basically a year into it, he is learning as he goes. The question is, will there be another misstep? He speaks this coming Thursday. The FOMC is going to be meeting 8 times. There's going to be a press conference every meeting in 2019, unlike in prior years. So there's opportunity as well as risk for him to reinforce that he has learned or that he still has to learn. Markets will be less forgiving and increasingly critical if he missteps again.
Stephanie, I didn't get the impression that he particularly cares about what investors are worried about, didn't want to go back to some of the temper tantrum days, but he probably, it sounds to me, is concerned about a self-fulfilling prophecy. If markets really react badly, that in turn can bring around some economic downfall, too. What was your take on it?
I agree with that. And basically what's going on is that Powell is definitely listening to the markets. We like that. We think that it could become a self-fulfilling prophecy if financial conditions tighten. And ultimately, we think what's going on is that the Fed's listening to the market, the tail is actually wagging the dog. And ultimately, we think that this will be more like the 2016 period where there was 4 rate hikes at the beginning of the year, and ultimately the Fed only raised rates once. We think that the Fed gave the market exactly what it wanted in terms of its language last week, and it's listening to the markets in terms of the financial conditions. So ultimately, we think that the Fed's going to go on hold at this point. If we see the market stabilize, if we see credit spreads come in and the economic conditions stay strong, and of course inflation stays in check, we'll see the Fed go on hold for a while. And if he reverses his course, we think it's a good thing because then the economy and the markets are in good shape.
If we take the Fed out of the equation and don't worry about what they're going to do because we don't anticipate anything happening, at least for the next few months, you do have earnings front and center. What we heard from Apple concerned a lot of people about the takedown in their numbers, what they're seeing in China. You say that it's not Apple that is the canary in the coal mine, but it may be energy. You want to explain that, Stephanie?
I do. If you look at what's happened with energy prices since its peak in 2018, energy has declined 35%, but you're still seeing earnings growth within the sector. Right now, analysts are projecting 5% earnings growth. And if you look back at the 2014 to 16 time period, energy prices went down about 60% during that period. But you saw earnings decline 60% in 2015 and then another 70% in 2016. So we think it's a little aggressive right now, that 5% growth number. We saw it come down quite a bit. Even last week I was looking at it. It came down from 7 to 5. And ultimately, we don't know what energy prices will do, but if they stay in this range, we think that we're going to need analysts to come off the expectations in the 2014 to 16 period that caused an earnings recession. That's our concern for next year.
Charles, how about you? What are you anticipating from earnings season?
Earnings in 2018 are probably around the 163 level. For 2019, you might expect like a 175 number. Modest single-digit gains. If you put a 17 multiple on it, you could get to 29.75. That would suggest, moving up, high teen percentages. If you look at what's happened in the fourth quarter, the S&P was down about 17%, classifying as one of the worst quarterly performances in about 15 years and about 15 quarters if you go back to 1926. So there are about 360 quarters in there. If you take out the fourth quarter of 1929, second quarter of 1930, the two worst quarters during the Depression. The average return for the S&P 1 year out after going down one of these big amounts of 15 to 25%, 30%, was about 25%. 5 years out, 3 years out, it's up 50%. 5 years out, it's up almost 100%.
All right, that completely confuses me. You think that this sell-off has been overdone, basically, is what you're saying?
The sell-off is basically overdone until you have proof that you're going into a recession. And even then, the market has already declined from its highs.
You're talking about an economic recession, not an earnings recession?
That's right. That's right.
So if we are dealing with an earnings recession, what happens in that scenario?
If you have an earnings recession, then you have some compression, obviously, and the market comes back in again, probably tests the lows we saw of the fourth quarter. But
so even with Powell and the Fed on hold, you're not convinced necessarily that this is the time to jump back in, or you're saying that you think the more likely scenario is we do
There were
rebound?
three critical headwinds. One was Powell. The second was the China-U.S. trade situation. We'll get more information, hopefully, on that by Tuesday morning, perhaps, because that's Tuesday evening Beijing time. The third situation is the global slowdown from EMs, China, to Europe, to the United States. Dovish implications for central banks around the world. PBOC cut by 100 on Friday. Bias towards easing for the ECB. The BOE has its own set of situations. A pivot by Powell and the U.S. Fed.
But again, game this out. We've seen one of the headwinds out of the way. We're going to get more information on the second. We don't know about the third yet.
We don't know about.
You think that the sell-off that we've seen overall has been a bit too much? Do you think the rebound we saw on Friday was warranted?
The rebound was a bit of covering. Mm-hmm. You had 100 S&P move from trough to peak. Pretty unusual, even in the times we're in now. You don't see that very often. So part of that was built into Powell markets anticipating before he even spoke that he was going to be dovish. Mm-hmm. And in fact, he did come across that way.
Right.
And then you had the better than expected non-farm payrolls, 185 better after revisions.